Margin, pips, and lot size. Margin is the required deposit that you use to open or maintain a market position. Margin can be either free or used. Used margin is the amount which is being used to maintain an open position, whereas free margin is the amount available to open a new position. With a $1,000 margin balance in your account and a 1% margin requirement to open a position, you can buy or sell a position worth up to a notational $100,000. This allows a trader to leverage his account by up to 100 times, or maintain a leverage ratio of 100 to 1. PIP is a shorter of percentage in point, and it measures the smallest amount of change in a currency pair. Currencies are quoted in 4 or 5 decimals, except yen crosses, which are quoted in 2 or 3 decimals. So the easiest way to look at the PIP would be to look at the final decimal movement. Example of how decimals would appear in Forex. Standard 4 decimal example. Pound dollar is quoted at 1.4500. You can see 4 numbers after the 1 and dot. Standard 5 decimal example. Pound dollar is quoted at 1.45000. So you can see 5 numbers after the dot. Standard 2 decimal example. Dollar yen is quoted at 123.30. So you can see just 3 and 0 after the point. Standard 3 decimal example. Dollar yen is quoted at 123.30. So you can see 3 numbers after the dot. Another example, Euro USD moved from 130 to 130.01, and this is smallest change of 0.0001 is what we call a pip. In this example, Euro moved 1 pip higher. A lot is a standard trading term referring to an order of 100,000 units. Standard lot is 100,000 units, but also we have a smaller sizes these days, like a mini lots that are equal to 10,000 units and micro lots that are equal to 1,000 units. Your lot size determines your overall risk for each trade. The larger lot size would make your risk higher, and the smaller lot sizes would make your total risk smaller. For example, if you open one standard lot trade, each pip would usually be equal to $10. If you open one mini lot, each pip would usually be equal to $1. Lot size plays a big role and is a factor that controls your overall risk value. For example, if you open a one standard lot buy trade at 130 on the Euro USD pair, each pip would usually be equal to $10. If Euro USD reaches 130.10, so 10 pip difference, your position would be in profit by $100. If you open a 1 mini lot buy trade at 125 of the Euro Yen pair, each pip would usually be equal to $1. If Euro Yen reaches 125.15, so 15 pips difference in plus, your position would be in profit by $15.